and welcome to this week's look back on the major news stories that have impacted the market in the last few days. We're going to start with something slightly earlier in the week, and that was when the FTSE 100 rockets and oil companies are reaping profits. The FTSE been more than a little volatile, obviously, recently, and in fact for quite some time now. And we saw a fairly sharp fall in the first half of October. A lot of that down to US strength in terms of the economy, and certainly the dollar, and of course the inevitable UK political turmoil that we saw take place. But this week has seen the advent of energy company results. Now, obviously, there's been a sharp focus for the last 18 months or so on the energy companies. The supply chain issues that we saw due to the lockdowns, the COVID situation, and then obviously the geopolitical concerns that we've been seeing in terms of Russian supply, their invasion of the Ukraine. So what sort of changed in the last few days? Well, I think it's fair to say one of the major drivers has been the energy company or oil company statements in terms of their performance for the last quarter. Now, BP, British Petroleum, announced it made $8.2 billion in profit in the third quarter of 2022. You compare that to a figure of $3.3 billion last year. Now, this is during a period of time where UK household bills are going through the roof. Yet, these energy companies are making massive profits. Is that fair? Well, certainly the general public in the UK don't seem to think so. But what can be done about it? Well, obviously we've got the background of rising prices in oil, etc. that we've talked about before, and we'll do again in a little while. But could we be looking at a windfall tax, something that's happened in the States or has been mentioned in the States? It's a definite possibility in the UK, and I think something the general public would welcome. But it looks like perhaps that's been priced in because BP shares were fairly flat after the announcement. But the FTSE went up to around the 71.90-ish mark, driven obviously by the fact these energy and oil companies are making serious profits, but also the providers of the raw materials to them also having that buoyant time. Now, currently we're seeing the FTSE around the 7100 mark with an interest rate of 75 basis points, which has literally just happened. So that's being digested as I speak. So what's going to happen to the FTSE now? Well, we're going to have to keep a close eye on the screens to find out. Okay, well, we've just spoken about the FTSE. We're going to switch our attention across the pond at the moment and look at the Fed shocking the market. Well, was it really a shock? We'll find out. Interest rates have been key this week. And the Fed raised the interest rate by 0.75% just a day ago. That's the highest single increase since 2008. The decision was predictable. We've been talking about it for a while, but volatility swept through the markets after, with the dollar index going up, stocks in the US going down, and also, little knock-on effect, crypto falling off as well. Whilst the number may have been expected, what was said is probably going to be the key drivers moving forward. The speeches given were dissected and pulled apart, and here's some of the key takeaways from Powell's speech. Now, he stated that inflation data was higher than expected, and that they want, I should say, a positive real interest rate. Now, those messages he gave there would suggest a further tightening of the policy, i.e. further big increases potentially in the interest rate. But there was a flip side to that coin. There were some messages which indicate towards a further easing of the current policy. That being that he said the US economy has slowed down quite dramatically recently. And he felt that it was time to slow down the increase in interest rates, and that may come as soon as the next meeting. Now, they were fairly bold statements which would seem to indicate a slowdown as early, as December, i.e. next month. What does that mean? Well, perhaps inflation coming under control a little bit, but certainly the policy of just increasing interest rates to deal with inflation may be being viewed and maybe being considered against recession elements. So that's another reason they may just ease up slightly. Now, they were the first to come out, and we've just had the UK interest rate announcement as well, which I'll come on to in the next video. Third topic this week, and this is a hot topic. This has literally just happened. Mentioned it at the end of the previous video, and that is the Bank of England, UK's central bank, has just increased the interest rate by 75 basis points. That's the same as what's happened in the US by the Fed. That's the largest single hike in 33 years in the UK. but it pushes back against some market expectations for the scale of future increases. The FTSE's reversed some of its losses from earlier today, and here are some of the key points that have come out already. Now, we haven't really had a chance to fully digest what those committee members have been saying, but the biggest single increase since 1989, it's the 8th consecutive rise in interest rates in the UK, and the Bank of England has warned of the longest recession since the Great Depression 100-odd years ago. They're talking about lasting 2 years and they're seeing double the unemployment rate. However, inflation, they're saying, is expected to fall next year now, slightly earlier than was previously felt. Now, the pound has come off, particularly against the dollar, since this announcement has been made. And it's also been stated that 2 members of the committee, and it's a committee process in the UK, they take a vote, but 2 members didn't favour a 75 basis point increase. Now, 75 basis points is 0.75%. And the Bank of England has stated, and they've added into their statements, that the peak rate will be lower than the markets currently expect. We were talking upper ends of 5-6% being expected just a few days, week or so ago. There is a background, of course, of energy prices and bills still increasing. There's now concern house prices will fall, potentially, one publication stated, as much as 30%. And they're all looming in the background. But Andrew Bailey, the governor, stated that there is a very tough road ahead. But he's also said that steep rises, as the market sort of priced in, could cause a longer impact. So an easing in the increase in interest rates is something that we're definitely thinking about right now. We still expect them to go up in the next year. However, maybe not as high as everybody has feared. There's lots more information to come out about this. Keep your eyes on news feeds across the board. This is going to have some serious impact in the coming days. Okay, finally this week, we're going to look at something that is, in fact, been mentioned a couple of times already in previous videos we've done, and that's, will the oil price continue to rise? It's important because obviously a lot of the inflation that we're seeing at the moment, a lot of the issues being faced across the globe, oil price is a key driver. Now, in October of this year, oil rose approximately 8%. Will that continue into November? Well, the rise may well be supported by the following things, which is the abolition of the zero-tolerance policy for coronavirus in China. Now, what that basically means is, obviously, so far, first signs of coronavirus in area, they've gone into total lockdown. Now, there seems to be quite a garnering of support for that policy to end. Of course, if that happens, clearly, demand for oil will increase. Lockdowns are not great for oil demand. Of course, we also now have rising tensions in the Middle East, which needs to be factored in. And of course, the ongoing situation between Russia and the Ukraine. And of course, Russia still being a major oil producer. In fact, the Secretary General of the International Energy Forum, or the IEF, stated he expects the price to be around $100 per barrel after the further tightening of EU sanctions on Russia. These all indicate further increases in the price of oil, perhaps heaping more pressure on inflation and more misery across the globe. There is a flip side, which is true of every coin, of course, which is that US inflation rates have meant that the Biden administration are already taking action to try and decrease the price of oil. In fact, they've released, as we mentioned last week, some of their strategic reserves and are prepared to do more to try and bring that price down slightly. And also, Biden this week has come out and initiated a windfall tax on oil company profits. What it's basically saying is any of those profits which aren't reinvested will be taxed at a new super high rate and reinvested by the government to keep those prices down. Now, this could be key in the coming few weeks, and in fact months. We are suffering across the globe with inflation. Oil and energy prices are a clear driver of that at the moment, some of which, of course, being affected by geopolitical concerns. Can the Biden administration succeed in driving those prices down? It'll be a massive fillip to the economies, not just of the US, but also UK and the EU, if they do so. All of the things we've been talking about, say, are pretty much entwined. And that's the issue at the moment. I think there's plenty of driving factors, but I think this is where governments are struggling to try and control the economies at the moment, is that it's very multifaceted. Keep your eyes open, Keep your ears open. Knowledge and information is going to be key. Most importantly, don't forget your risk management strategies. Good luck for the week ahead.